If you're looking to get into day trading and don't know where to start, or maybe you are a seasoned stock trader or investor but are looking to explore into day trading futures, this video is for you. As in this video, I'm going to give you guys the most basic and simple explanation to day trading futures. Now, what are the E-mini futures? Very simply, they're just another financial instrument that is actually very friendly and great for day trading. There are many options and different categories of contracts. However, I will be focused only on the NASDAQ 100 and the S&P 500 in this video. The other two very popular contracts out there are the crude oil and gold. I personally do not trade them, therefore I'll be skipping them in this video. Now, if you take a look and you Google it, you YouTube it, and you read deeply into what futures really are, it can get very confusing and overwhelming, especially for a novice. By my opinion, in the beginning, don't even bother with that information. At the end of the day, it does not matter for day trading. We're just day trading these futures. We're not holding them long term. And at the end of the day, it's just a chart like any other stock. So we'll focus on how to get you guys started into trading futures. We'll talk about how do they move. We'll cover what brokers we should be using and how much capital is needed. Of course, we'll get into some different pros and cons of trading futures and compare them to trading stocks. And right off the bat, one of the biggest perks for day trading futures is that they are great for small accounts. Broker minimums are as low as $200 to $400, and one micro contract for the ES, for example, would only require $40 of equity in your account, and the micro contract of the NQ would require just $100 of equity in your account. Now, with that high leverage provided by these brokers and the incredible range both on the NASDAQ and the ES, high percent returns are very possible every single day. Now, when we are trading with a small account, of course, we have to keep in mind the associated costs that come with it. And with futures, many of the professional platforms are free and the commissions are very low. Now, there's no free commissions trading. However, if you guys are aware, free commissions in stock come at an expense of selling order flow and slower executions. Okay, also, last but not least, we don't need any scanners. We don't have to find any of the hottest stocks, right, which those scanners can be pricey, and then we don't have to do research on those stocks, which can be time consuming. We are just focused on one or two charts, and that's about it. Okay, so you're wondering, okay, small account, what about the PTT rule? Well, the PTT rule is an SEC regulation, and the futures are not regulated by the SEC. They're actually regulated by the CFTC. Therefore, there is no PTT rule, and you could day trade without any restrictions. If you're not familiar with what the PTT rule is, very simply, if you're trading stocks on a margin account, you cannot place more than 3 complete trades in a 5-day rolling period. A complete trade is that you buy and sell the same stock in that same day. And of course, this does not apply to cash accounts, but cash accounts take time to clear the funds once you sell the stock. Therefore, it's not really feasible to day trade on a small cash account. Now let's talk about trading hours. So as you guys know, stocks are traded from 9:30 a.m. to 4 p.m. Eastern time. And I know there's pre-market, I know there's after hours, but there's a lot of restrictions. You cannot use market orders during that time. It's much lower volume, and sometimes it's simply untradeable. Although at times, let's not forget, there is great opportunities to trade pre-market and after hours. I'm not saying there isn't, but typically we do trade stocks from 9:30 to 4 p.m. Now, when it comes to the NASDAQ and the S&P 500 futures, they trade 23 hours a day, 6 days a week. So we'll open on Sunday at 6 p.m. and then we'll trade all the way until Friday at 5 p.m. Now, the only time the market is closed is from 5 p.m. From 5 p.m. to 6 p.m. every single day. So again, we'll open, let's say tonight at 6 p.m. We'll go all the way till 5 p.m. tomorrow. We'll close for 1 hour and then reopen at 6. During that 1 hour, everything will reset. So if you have your account, your P&L reset, your account balance will reset, and so on and so forth. Now, even though we're able to trade all 23 hours a day, obviously there's more volatility traded at 9:30 a.m. And that is because we are trading the NASDAQ and the S&P 500, which are directly correlated to the stock market, right? Also, coming up is the President's Day, right? So for President's Day, the stock market is closed versus the futures market is actually partially open. So we will be trading from 6 p.m. on Sunday until Monday, which is President's Day, until 1 p.m. Eastern time. 1 p.m. Eastern time, the market will close, and then it will reopen 5 hours later at 6 p.m., for the following session, which is really cool. So overall, futures market is only fully closed 3 days out of the year for New Year's Eve, Good Friday, and Christmas Day, which I believe the stock market is actually closed for 9 or 10 total days out of the year. Now let's dive deeper and let's compare the E-mini contracts versus the micro E-mini contracts. So the micro futures were just introduced in 2019. They're a game changer, but I think people are still not aware of them. They're not fully understanding how micro futures work. Therefore, trading futures is still not super mainstream and popular, especially amongst newer traders and people with small accounts. But basically what a micro future allows us to do is to buy 1/10 of a mini futures contract. If you've ever traded futures before, you are aware of the mini contracts, and the mini contracts can move really fast and they could be deadly to a small account. Not only do they move really fast, but also they are more expensive. With the micro contract, we're able to divide everything into 10. So one micro contract on the NQ will cost just $100 versus if you were buying a mini contract, it will cost you $1,000. And then for every $10 of profit or loss on a micro contract will be $100 on the mini. Therefore, you are able to manage your risk, manage your exposure in more detail. And again, they are great for beginners. They're also good for more experienced traders who want to scale in and out of trades as well, because you could get into your position and out of your position in pieces. Because again, buying 10 micros is the same as buying one mini, but just at a slightly higher commission rate. I believe buying 10 micros will cost you around $6 versus buying one mini will cost you around $2.13. But again, buying 5 micros is like buying half a mini. So again, you have much more control over your risk. And novice traders should only start with micros. No matter how big your account is, only start with micros to get familiar with futures. Again, minis move really fast and then build slowly into 2 contracts, 3 contracts, maybe 5 micros, and so on and so forth. So let's talk a little bit more about how much capital is needed to day trade futures. I personally always thought that large sum of money was required to day trade futures, but that is actually the furthest thing from the truth. Now, the margin rates for the NQ and the ES are super low. Therefore, if you want to just get your feet wet and get started with a small account, the broker minimums, like we mentioned earlier, are just $200 to $400. So let's say you want to get started with a $400 account. You could buy up to 10 micro contracts of the ES or just one mini contract of the ES. And you could buy up to 4 micro contracts of the NQ. And you will not be able to buy a mini NQ until you have at least $1,000 in your account. So those are the current margin rates for these 2 contracts. Again, $100 for a micro NQ and $40 for micro ES. Therefore, as you can see, with a small account, you could buy a significant amount of contracts. Now, if you're looking to day trade for a living or maybe as a secondary income, obviously you would need a little bit more of equity in your account to do that. But to give you guys an idea, I think with a $5,000 or $10,000 account, you would be able to make $1,000 to $2,000 a day, no problem, if you are proficient and consistent at trading futures. With trading stocks, I believe that you are required a little bit more of capital, especially if you're in the US. You automatically are required to have over $25,000 in your account at all times to be able to day trade without falling into the PDT rule. The margin rates, just so you guys know, for the ES and NQ and other contracts are subject to change. So if there's a stock market crash, for example, and there's a huge spike in volatility for a time period, the brokers will require higher margin rates just to protect themselves and protect you from overexposure. Now, these are only for day trading and not for overnight swinging or investing. Holding long term with futures requires much more capital. Okay, we are not interested in that. We are here only to day trade futures. So futures are leveraged, and that is really cool because the price they are trading at does not matter to us. So if NQ is trading at 10,000 today and it will be trading at 13,000 3 months from now, the capital required to participate in one contract will be exactly the same. Unlike stocks, the more expensive the stock, the more equity is needed for that stock to be purchased, right? A $10 stock, if it goes up to 15, it's going to be 50% more equity needed to buy that stock. Of course, you could buy long or short sell futures without any restrictions as well. There's no SSR ever. There's no borrow fees. If you trade stocks, you know that borrow fees can get pretty expensive. All right, so now that we have one confusing part out of the way with the margin rates, let's now talk about the ticks and the values of the ticks in trading the NQ and the ES. So unlike stocks that move in cents, the ES and the NQ move in quarter increments. That means there are only 4 steps, or as we call them, ticks, in every single dollar. So it goes from 0 to 25 cents to 50 cents to 75 cents. There's no 27 cents, no 52 cents, 53 cents, and so on and so forth. It's only 4 ticks, and it skips in quarters. Every futures contract will have different tick values, and that gets a little bit confusing in the beginning. But once you grasp this concept, everything else is pretty much done deal and simple. This again is only for the NQ and the ES. I am not talking about crude oil and gold futures. Everything is different. Again, all contracts and all futures have different tick values. Let's talk about the micro contracts for the NASDAQ. The NASDAQ has a 50-cent tick. So that means that every time the NASDAQ moves 25 cents, if you have one contract, your PNL will go up or down depending on which side of the trade it is at. It'll move by 50 cents. Now, since there's 4 ticks in one single dollar, $1 move on the NASDAQ will create $2 of profit or loss. So basically, it's like having 2 shares. So if you buy one contract, it's like having 2 shares of the NQ, because every time it moves up or down $1, it produces $2 of profit or loss. Okay. Now, if you are trading the minis, on the other hand, it's like having 20 shares. You multiply everything by 10. So 1 tick, so 1 quarter increment on the NASDAQ mini is actually $5 of profit or loss. And then 1 point move on the NASDAQ mini is actually $20 of profit or loss. Now let's talk about the S&P 500 or the ES. So the NASDAQ does have much bigger range intraday every single day. The ES has much lower range. However, the tick value is bigger. So for every quarter that the ES moves, you make $1.25 or you lose $1.25 on the micro side, and it's $12.50 on the mini side. Again, minis are just 10 times more. Super simple. Now, since there's 4 ticks in $1, 125 times 4, it's $5. So for every move that the S&P makes, every $1 move that the S&P makes, it's $5 of profit or loss. And then if you're trading the minis, it will be $50 for 1 point. And then of course, if you're, let's say, trading 5 micro contracts, this would be $25 because you just multiply everything by 5 and how many contracts you have. Again, all of this is due having the margin and leverage. Just try to keep it simple and do not overcomplicate things, but do take a screenshot of this. This is the most important part about trading futures and understanding them. That's why it's also very important to paper trade futures in the beginning. Use a simulator to kind of get an idea of how they move, because again, if you're trading the minis, for example, the $20 every dollar it moves, or even $50 every dollar the ES moves, it's pretty quick and you could get hurt pretty bad really fast. Now let's take a look at a 1-minute chart of the NQ and give you guys a trade example and show you how the NQ actually moves. So here, the first thing you have to notice is that from 2 p.m. till about 4 p.m. here Eastern time, so in just 2 hours, the NASDAQ actually had a range of 100 plus points. That means with just 1 micro contract, if you would have bought at the low and sold it at the high, you have the potential to make $200 of profit. Again, that would have only costed you $100 of equity. Therefore, you would have made 200% on return of your investment. That's amazing. And these moves happen every single day. Every single candle here is 1 minute. So let's say we enter into a trade with the micro contract at $13,755. We write it up, and let's say we get out here at $13,775. Again, I'm not talking about any strategies, but let's say we did sell it here. We made 20 points of profit on the NASDAQ. So what does that mean for our P&L? Again, for every point that you make on the NASDAQ, a point meaning $1. So $1 move up, you would make $2 of actual profit. So if we made 20 points total, you multiply 20 times 2 and you get $40. So your P&L would be actually $40 on $100 of equity. And with 13 minutes, you made 40% return, which is amazing, right? Now let's take a look at a mini side. Okay, so this is the micro. and now this is the mini. So as you guys could see right away, the chart is exactly the same, but your trades just multiplied by 10. So if you enter at the same price point, $13,755, we enter for 20-point profit in 13 minutes. This time our P&L would actually be $400 because we did take the mini contract, right? And the mini contract cost $1,000. Therefore, we still get 40% return. Again, 20-point move. For every point that we get on the mini is $20 of profit. So 20 times 20 equals 400. And I actually love to scalp these super fast for $2 or maybe even $1, maybe sometimes $3, and get like $30 to $50 on one mini contract within seconds. And I could just do that, 5 to 10 times a day, and I make a decent amount of money. Let's say I want to make $200-300 extra on top of my main trade. I could just scalp my way out there, and those trades last between a second to 10 seconds and super fast. And again, it's the volatility that allows it for that. So up next, let's talk about the ES. So as you can see, the NQ trades around 13,800 right now. This is the last day of trading that we had before I made this video. And here is the ES. So the ES does look very similar. The chart is very similar. However, the price that it's trading at and the range is much less, right? So from the low here at 2 p.m. until 4 p.m., it was from around 39.08 to 39.36. So let's give it around 28 points of range. So that's much less of a range. But again, for every point on the ES, we actually make $5. So we make 2.5 times more than we do on the NQ. And it's also 2.5 times cheaper to get into it. So you really have to find whichever you prefer to trade. ES is a little bit cheaper, but I personally do prefer trading the NQ. It's just more liquid for me. But yeah, let's give you guys a trade example on the ES. So let's say we enter with one micro contract, which would cost us only $40 of equity, and we enter at 3,918 here for the breakout. And let's say we sold it here for profit of 9 points at 3,927. So let's do the math. If we had for every point $5 of profit, we made 9 points total. So 9 times 5 is $35. So for just a $40 contract, we made $35 profit in just 18 minutes. So that is amazing. And as you can see, this is a very small portion of the overall range on that day. And this is not even the whole day. This is just last couple hours of the day. So again, trading the futures is just amazing, and the ROI can be incredible. All right, so a couple other cool benefits of trading futures. Let's compare them to trading volatile stocks. So a lot of us who day trade stocks, we focus on the low float stocks or some super volatile stocks, even in the mid and large cap sector. However, with those stocks, there are big spreads between the bid and the ask, which will result in incredible slippage on especially your stop outs. Sometimes your entries, if you use market orders, but especially if you use hard stops, these high volatile stocks and the low float stocks will make risk management super hard. So if there's a squeeze and you're short, or if there's a big dump and you're long and you want to stop out, then you might lose a lot more than what you actually planned originally on that trade because of slippage, right? So if you have 1,000 shares and you have extra 20-30 cents of slippage, that's extra $200-300 of loss. And that is very annoying, and it happens all the time. Versus in futures, there's minimum slippage, right? So they're very liquid and they have no spreads like stocks. You usually get filled without slippage on your stops or your entries. Using bracket orders makes everything super easy by trading on the chart. There's no restrictions versus with stocks. Sometimes there's restrictions. You can't put a sell order and a buy order at the same time. It just gets complicated. If you traded stocks before, you know that. And then on futures, you also have instant fills because it is the most liquid instrument out there. And it's just amazing. So that's a huge benefit to trading futures. One more big thing for trading futures, once you actually become profitable, the big thing is that 60% of profits in the US, at least 60% of profits for the futures are taxed at long-term capital gains, and the maximum bracket for that is only 20%. Then the rest, the 40% of your profits are taxed at regular income. And just to give you guys a comparison, 100% of stocks and options trading is taxed at regular income, also known as the short-term capital gain. All right, so that's another huge benefit to trading futures. All right, really quickly, let's talk about brokers, what brokers you should look into. Again, this is going to be very brief, but do your own research, and maybe in the future I'll post a more detailed video. But AIM futures, you can't go wrong with them. They have the cheapest commissions, they have no wire fees, they have tons of platforms to choose from. And I personally use Quant Tower, which is my favorite platform. Again, aimfutures.com, check them out. The other broker that I do like and I do use is Tradeovate. They have a couple cool options. I do not use these options, but they do offer a commission-free membership for high volume traders, which is great for scalping or someone that's trading a ton of contracts. But the membership is around $2,400 upfront for the entire year. So it's not worth it for everyone. And again, those are just commissions. That does not include the exchange fees. Okay, so there's still exchange fees that you would have to pay on top of the commissions. They do have a super easy online web platform called the TS Trader, which you've seen in the video. And there's no account minimum with them. So again, check them out at tradeovate.com. And last but not least, I want to mention NinjaTrader just because they're a big broker. They're not the cheapest. They do have an amazing platform, their own platform, but it's not free. But if you do purchase a lifetime membership for that platform, you will get cheaper commissions for trading futures. Again, check out ninjatrader.com. And last but not least, I just want to introduce you guys to a TOPSTEP Trader Combine. Basically, what this combine allows you to do is to get a funded account by passing a evaluated trial that has certain rules and limitations. There's a lot of things you can and can't do in that trial. However, if you do pass, you will get a funded account. Okay, if you do get that funded account at the end of it, you'll keep 80% of profit and they will keep 20% profit from your gains. But the risk is all on them, it's not on you. So you have very limited risk, and it's also better than paper trading. So even if you don't pass in the beginning, this is still better than paper trading as it will involve emotion. So it's going to feel a lot more real. There's still something on the line versus if you are just paper trading, you might just be pressing buttons, not really caring, and you'll be making millions. But then when it comes time to trade real money, you will get emotional and you will lose. It happens all the time. Again, these plans do start at around $135 and go up to like $375 depending on which tier you want to do. But once you do pass the combine, which could be passed in minimum of 15 days, that monthly fee is then waived. Once you are funded, there's no more fees and you're just trading. If you make money and you withdraw money, they'll keep 20% of it. You get 80% of it. Again, there's a link in the bio and a detailed video is to come, and maybe we'll do a combine together on stream. Again, make sure you hit that like, hit the subscribe button. And if you guys have any questions regarding futures trading, shoot me a message, leave me a comment, and I'll get back to you as soon as I can.